had consultations across the board, including policymakers and regulators. And we are here really to explore transformative ideas, foster collaboration, and drive digital transformation that will redefine how financial services are delivered and accessed. AFIC's mandate, which includes driving innovation in fintech, advocacy and policy engagements with regulators and policymakers, capacity building for fintech stakeholders, facilitating market access and funding opportunities, promoting collaboration and knowledge sharing in the fintech ecosystem. So this workshop is not just an event, it's a platform for dialogue, innovation, and action as we delve into the opportunities and challenges that open finance presents. And not, guys, we are not talking about open banking. We're talking about open finance because our hope is to encompass the whole financial services ecosystem that includes banks, fintechs, insurance companies, data companies, like my good friend representing Credit Info here in front of me, Kamau Kunyiha. Kamau, thank you, and everybody else for being here. It just shows the wide representation that we have here today, not just offline, physical, but also online. So let us, guys, seize this moment to lead Kenya's open finance movement with vision, determination, and unity. Before I thank everybody for the last time, I just want my counterparts and my colleagues from Kenya Bankers Association and FSDA to come on the stage with me and to just reaffirm our commitment to open finance in this part of the world. Asante sana, thank you very much. Francis Guer is leading with his colleague Juliet from Kenya Bankers Association.
Juliet is FSD.
FSD, of course, and my good friend Fidelis. Now, I want everybody to take note that we are extremely gender sensitive here.
It's not extreme.
Yeah. So some people have just depoxed themselves here. You know what I mean? So guys, let's have an extremely engaging day. This is what we call open discussions. Moses, we call them Charterhouse rules, right? Chatham House rules. You know, this NGO talk, sometimes I keep on forgetting. So it's open conversations as long as we are all respectful, we can be passionate about our views, and let's make sure that we are contributing towards an open finance ecosystem future for Kenya. Asanteni sana. Guys, thank you very much. Moses, back to you.
Thank you so much, Ali, for framing the context and reminding us some of us used to have hair on our head instead of the beards that we have nowadays when we think about the early days of the internet. And I think underpinning all that we're going to discuss today is this idea that the internet really provides a platform that makes things like open finance possible. So let's move to our next speaker. His name is Rafe Maza. He's the director of Fair Finance Consulting. He's got deep experience in financial consumer protection and market design. Rafe will also share insights from other countries and Kenya's own readiness for open finance. And I'd like to welcome him to the stage to give us his remarks.
Thank you very much. And it'll be not just remarks, but kind of a conversation. And while I'm up here, do we have the clicker to advance the slides? If we could bring that down. So it's really nice to see everyone here. My name is Rick Mazer. I am a competition and consumer protection, I guess expert, but also just passionate believer in the benefits of open competition in digital economy. And some of you might not know, but the first conversations about what we called open banking at the time, and we now called open finance in Kenya, occurred in 2018. And so it's really nice to see now, 7 years later, that we are really driving forward to talk about what, not just the idea, and wouldn't that be great, but what specifically would it look like and how do we get there? So throughout today, we'll discuss several different topics related to open finance and dive into the weeds a bit. And we really want to hear your feedback, because all of the information we take now will shape our suggestions towards a vision of how open finance should look in Kenya, because we know we cannot copy-paste from other markets. Kenya is unique and special and needs its own set of rules. Just to, is it, the magic button is not working. Oh, there we go. Okay. Just to start, since I know most people here, are familiar with open finance, but I just want to start by framing, because a lot of what we'll talk about today is going to be about what industry wants, what industry can do. But I want to remember at first principle that open finance is about the consumer at the center, right? And so really, open finance is about a few simple things. First, that it's consumer-led data sharing, right? And so that implies a certain amount of consumer control and direction in the process. And that the consumer is able to not just share data when providers are connected and are willing, but to say, I would like my data shared with these providers that have been vetted in this system. And I think that's the last element that really excites me about open finance is we know there's so much data sharing that already happens, but the rules are a mix. From our conversations with you all, the data standards and templates are a mix, sometimes a mess. And this is really about building towards common templates where the consumer is directing where they want their data to go, but all the providers are benefiting from a much more efficient ecosystem. And so today we'll do a bit about what is open finance and diving into some of the rules. We'll share some of the insights from all of you. And as you can see, we also really want to map out the next steps. So be thinking as we discuss if there are points you don't agree with or would like to amend, and if there are things you would like to suggest as future actions to start the process towards implementation of open finance in Kenya. And I want to share a few examples just to show you, why I think this is worth it from some of the leading open finance markets. So first, how many of you have heard about open finance in Brazil? Okay, a few hands. There's a lot of success stories. This is really one of the most impressive success stories. And as you can see, this is just the dashboard of the Brazilian Central Bank keeps that they update every week of the number of active accounts that have data sharing consents in Brazil. And you can see we're now, as of last month, at almost 68 million. And maybe people consent to share their data, but they never really do anything with it. That's not the case in Brazil. The APIs for open finance, you have more than 2 billion API calls a week. So not only is it 68 million connected accounts, they are really being used for all kinds of things. And these are just some examples of what they've seen in Brazil and what open finance unlocks in credit specifically. I mean, imagine if credit approvals could drop on average from 15 to 5 days. Think about the cost savings for you, the efficiencies for consumers to get that business loan when they need it, not after they needed it. Think about if you could reduce interest charges by almost $700,000 US, like Nubank was able to do with their customers through better data and better risk management. What if you could increase credit limits by 1.4 million cumulatively, like Banco do Brasil, the largest bank in Brazil, was able to do? So these are real impacts when you have a substantial amount of people sharing useful information across the ecosystem, and you can just see the benefits for providers. And one thing that I think is really cool as well with open finance is it starts to, I'm not sure where I should be pointing this. Yeah, can you advance the slide, please? Is that it doesn't just have to stop with like account data. This kind of overwhelming slide, this is from India. And I think what India is doing really well is they are saying, we're not just going to connect bank accounts, we're going to connect government services. They connect land title registration. And this is just one example in this unified lending interface of the types of things that they've been able to build. You can see they have data on milk pouring for dairy farmers. I mean, if you think about the power of digitizing agricultural productivity in a country where I think is it 80% of Kenyans are at least partially employed in agriculture, you start to build these data stacks and you start to really help the real economy. Next slide. Then the last thing I would say for industry, I think you see a tremendous potential of increasing innovation and diversity. So this last one is Korea. And like many of these markets, you start, if you look at the table on that side, 2019, open finance started with just the banks. But you see in just a few years' time, it really expands quickly to now where fintechs are, as makes sense, are the majority of institutions participating. And when you look at API uses, you can see fintechs and then financial companies, which are other non-bank entities, like non-bank lenders, are really the dominant forces in API calls. So you start to see this ecosystem bring in new entrants, and you also see really nice partnerships emerging across all the providers because connectivity is easier, data security and accreditation is easier. So there's a lot of really nice benefits to these models, and I think we're a few years in and they're really starting to show themselves. Next slide. And I like to think about, imagine this in Kenya, right? Like, we know that small businesses are 96% of employment in Kenya, and we know even though a lot of you do great work reaching them and continue to innovate with new solutions for them, they're still underserved in terms of credit. And so think of even just like, if all we had to start was shared KYC and business records, mobile money, digital credit, and banking data, even that alone in a consolidated, verified, secure ecosystem of APIs, I think could unlock so much for MSMEs. Next slide. And Kenya is ready. Honestly, Kenya has been ready since 2018, in my opinion. This is the Silicon Savannah. The levels of use of digital payments are just some of the highest you will find in the world, and I think, one of the highest on the continent for sure. And when we look at, this is from some work I did with CGAP of sort of what are the enablers that get you to open finance, Kenya is checking every box. You have really high digital account usage. We're building the fast payment system. You have an incredible diversity of providers. Just look at this room. So we are ticking all the boxes, and we see the benefits. So it really is time for open finance in Canada, in Kenya. Next slide. So as was mentioned at the beginning, a lot of what we're presenting today, it's a mix of sort of discussion points, global examples, but feedback from all of you over the past several months. And when we spoke to you, I think there are really 4 key messages that I want to just get across, and we're going to dive into more detailed responses from you throughout the day. And as I said, please add, amend, challenge some of these as we go along. And I think the first thing is that it really seems like there is broad support. We talked across a lot of industries about open finance, and generally people see the value and they see the benefit. So I think there's a market willingness, which is really a key element of this. One of the main reasons I think people are so ready is in conversations with all of you, it's clear the current data sharing reality is not fully working as it should. Fragmented, inconsistent, unreliable, those were some of the things that that came up. And beyond the credit reference bureaus, you don't really have sort of open, multi-party information sharing occurring. You really just have these kind of data silos. And so hopefully Open Finance can break down those silos. The other thing, and this is so important, I often say you shouldn't do open finance in a country without a good data protection law, and we're lucky we have one here. You all rightfully so understand the importance of data security in open finance. We know that fraud is becoming more and more common in payment systems. We know AI has enabled all kinds of things, like they can impersonate voices, they can impersonate video. Last week, an elder relative of mine was a victim to fraud. It is happening. And so you all understand this system needs to have robust data security within it. The other thing that we heard consistently was most of you think there needs to be some sort of policy mandate along with industry effort. I think not necessarily policymakers building the architecture, right? You all are the builders. But to get everyone to participate, to have common rules and standards, to have robust data security, we need to have some sort of policy and industry collaboration. So those are the four main messages. Next slide, please. Then what are you all excited about? I thought this was interesting, when we asked what do you see as the key benefits of open finance in Kenya? And as you can see, innovation and then increased competition and choice were really the top ones. And that matches, although flipped, with a global survey that was done of open finance markets about what their primary motivations were for building open finance. And there are other benefits like inclusion and things like that of open finance, but Kenya is pretty included. And so I think you all are really spot on that this is about furthering innovation. Let's not stagnate with where we've got so far. And it's about increasing this consumer-led competition and choice and reducing the costs of financial services for things like the MSME sector. Next slide. And I mentioned this before, you all were really worried about data security risks in open finance. The other risk was about policy development and implementation. And it's the things you might expect, right? The policy process might delay, some participants might drag their feet, things like that. And so that's where I think it's really important, the feedback we got, that there needs to be a transparent and sort of collaborative approach between the industry and policymaker so that we can all hold each other accountable, we can solve problems together and move forward. I think that's particularly important when we're talking about open finance where you're mixing large and small, bank, payments, fintech. You have this diversity of ecosystem, and so you really need a strong and open governance system. Next slide. Okay, and so just quickly, there's a few different models globally, and you can see it goes from kind of fully voluntary, which is the USA, to more heavily policy-led, Brazil and then Australia. And there's some models in between, like Nigeria, they have an open banking regulation, but it's not mandatory to participate, and the central bank plays a limited oversight function. Nigeria has really struggled to get going. They issued those regulations 2 years ago this month, and I have not seen live open APIs. So I think it's a lesson on some of the challenges of voluntary models. Next slide. And this is, again, a global survey from the Cambridge Center, which shows that generally regulation-led models are scaling faster when they look at all the regions. In terms of the number of data, this is the number of data points brought in. They've analyzed it a few different ways. But you get more data types and more types of participants in when you have some sort of policy mandate. Again, this doesn't mean government builds and owns, but government should set some rules of the road and make sure everyone participates equally. Next slide. All right, so then a few more insights from you all. Okay, so we're going to do open finance. Who's going to be included? And this is not surprising to you, but banking and payments or mobile money were almost universally seen as they should be in the first phase of open finance. Then you had non-bank digital lenders, insurance, and MFIs with a significant portion of participants who thought they might be included in a first wave. And one question I have that I want to kind of discuss today is, right, so when you have banking or payments, there's a lot of regulatory clarity, and you can sort of define who is who. You know, sometimes with digital lending, I know the licenses are advancing, but there still are portions of the industry that are not licensed. And this creates, I think, a challenge we need to figure out in Kenya of, what is the rules or what is the criteria for participation in sectors where we think maybe not everyone is ready, but definitely some are ready. And so that's something I'm going to probe on a little later today as well. Like, what can we have a mix of all banks and payment service providers must participate, and digital lenders may participate if, right? So that those who are ready can join, those who maybe aren't, who don't have the robust data security, maybe need to meet certain criteria. I think that's going to be a real design challenge here. But as you can see, generally, I think there's understanding, even if we just unlock payments and mobile money data, honestly, I think we'd get quite far. Next slide. All right, and this is, I won't bore you all with the details too much, but I talked about shared industry and policymaker responsibility. There's a lot of ways you can do this across the globe. We're seeing different things like, you know, a government agency fully implements, that's an Australia example. You have a special purpose entity is created where it's like an NGO or sort of a parastatal sometimes with shared governance. So like if you look at open banking implementation entity in the United Kingdom, for example, and you have chaired by the Competition Markets Authority, but with membership across industry that really worked on developing the standards. You can have a nonprofit or self-regulatory body. That's what's happening in India and in the US. And again, those are voluntary markets. India is somewhat voluntary, but you have Sahamati in India, which took these regulations and brought together the industry and has developed common APIs and standards and actually does all the monitoring of the API quality and health and shares it with the regulator. And then you can just have voluntary decentralized standards, which I definitely feel like from your feedback is not the path Kenya wants to go. It's sort of where we're at right now. Next slide. I think I've covered this pretty well, but just to mention, you know, this idea of a mixed governance approach is something that seemed to be what you all were supporting, although we can discuss and push back on that a bit as we go. Next slide. And this is an example of how that can work in practice. I think Brazil is a great example where the industry bodies, they run the APIs, they monitor and have developed a ticketing system for disputes between participants, like the API failed, this transaction didn't process, this data's, you know, incorrect or missing, and I have a dispute with another provider. They don't go right to the regulator. They have a ticketing system that's internal, and they have been able to resolve, I believe it's almost all of their disputes internally, but at the same time, the central bank has a window into the ticketing system and is able to monitor, and that's how they're able to share publicly the volume of API calls, the number of accounts linked, see what are the main issues consumers have. And so this is an example where I think we can start to build things that are maybe maintained by industry, but linked to policy, and that could be perhaps a strong model for Kenya. Next slide. All right, so that's the end of my overview, and it looks like we still have some time, which is good. I wanted to ask all of you just to kick off a brief discussion before we hear from our panelists. And I would like each of you, you see there's a pen and a paper in front of you. Just take a minute and write down responses to these three questions, and then I'll ask a few people to share any initial observations around these topics. We'll just take a minute, and then we'll have a discussion. All right, we'll do 30 more seconds. All right, those who are still writing can keep writing, but I'd love to get some volunteers. Can someone share with me one thing that we've shared in terms of the industry perspective so far that we're like, yes, I agree with that, or that makes sense? Yes. Absolutely. That is sort of the bedrock. You said customer. Actually, do we have a microphone? Can we? And I'll have you repeat it with the microphone. Yep. Sorry about that. No, it was the gentleman in front of you, right there.
Yeah, I agree that the customer consent is supreme for data access and sharing.
That's sort of the end-all, be-all. You cannot do anything without the customer consent. And I think it's also, it's not just a question of did they consent, was it meaningful, right? And is the consent limited, right? So this is, I mean, you all get those terms and conditions you don't read, right? And it's just overwhelming to keep track of. One thing I think that's nice about open finance is you can develop common and meaningful standards of consent. So it doesn't look different when you're consenting to share your loan data from one provider or another provider. And you also, they've built into these open finance systems periodic consent refreshes, right? Where they say you have to get the reconsent every 6 months. So it keeps consumers more aware. I'm really glad you started with that. Another thing that someone agreed with or thought made sense. There we go. Yes.
I also agree that a partially mandated approach will be more effective than being. Okay, I was saying a partially mandated approach would be a lot more effective than doing a voluntary one.
Explain to me why that resonated you, or why you think that makes sense in Kenya.
I believe that the industry players would be quite reluctant to change from what they're currently doing to changing to open finance. Yeah. So I think having that mandated system will allow it to happen a lot faster and more effectively.
Yeah, and I think to be fair to reluctant providers, there's also a big risk they'd be taking, right? And so am I going to be the one who leaps forward and takes that risk on my own when I'm not sure everyone else is jumping off the dock into the water with me? Yeah, excellent. Any other agreements? And then we'll get to the disagreements. Yes.
I also think an approach that incentivizes both customers, consumers, and industry actors will also be a good framework. Because then beyond them being mandated and standardized, that incentive is also important to just create that participation and everyone to plug in.
So what are some ideas you have of like how to incentivize industry and participation?
I think top of mind, the first thing will be how do we also create awareness around the benefits of open finance? And how do we cascade that in a way that a common consumer will be able to understand?
Excellent. Yeah, explaining this, especially if it's someone still using a USSD menu, like it can be quite challenging. We'll talk about UI, UX standards later as well. All right, let's get to any perspective you either disagree with or would modify or push back on that we've heard so far. All right, well, those may come out later, I guess, but I think we'd really listen to you all then. Oh, there we are. Can we go back to the slide, please? Okay, all right, this is a fun one I'm excited for. So open finance in Kenya will be a success if. I have to kind of open, because I really want to hear from you. Who wants to share how they would measure that open finance is a success in Kenya? to you. Yes. Here, hold it, wait for the microphone. No, this gentleman right here, sorry.
Yeah, so I think it's going to be successful if we have full participation by larger players. Yeah.
Yeah. Full participation by larger players, yeah. Yeah, so everyone really does this in good faith. Everyone's really participating, absolutely. Other ideas? What's another way? Yep, just pass it.
Well, I'm thinking from your presentation, you also talked about fragmentation.
Yeah.
I'm really pretty much looking at success from a point of trying to consolidate, like have a centralization or consolidation of data, especially within the different industry verticals.
What right now is the data that is the most challenging to reconcile, or what type of data do you have the most difficulty with currently?
Well, speaking from fintech or financial services side, I would look at it from like an open or a closed loop, because again, you see, when it comes to mobile financial services, for example, now that you're speaking about mobile money and Kenya in itself having the highest rate, especially when it comes to mobile money uptake, you'd notice that we have a lot of wallets, mobile wallets, and these financial services of fintechs actually exist within an ecosystem, but then it's a bit fragmented because again, each and every industry player is focused on a particular agenda.
And sometimes they use different templates even. Yeah,
Yes.
looks like we have another idea.
I think another maybe minefield could be around customer ownership. So the fact that customers consent, but then you have multiple actors playing different roles, maybe multiple lenders. So having clear policy frameworks that basically safeguards the relationships.
Yeah, absolutely. And one of the things when we're talking about data, it's easily duplicated and replicable. And that's a big risk in open finance is maybe you use the data responsibly, but then someone else receives it and they share it with some third party and there's a data breach. And so I absolutely agree. Yeah, I think there, yeah, Ali and then.
Sorry. So, I keep on hearing a lot about customer ownership. I mean, surely, who owns me? I mean, really, guys, let's get out of this. Forgive me for being very strongly worded about this, but let's get out of this nonsense about I own this customer. You own nothing. You own nothing. What you do is you give value and you get value in return. Simple. When you stop giving me value, I move on. Yeah? So the fact that you have some of my data, like my name, where I used to stay 15 years ago, where you have my PO box number that I never own, I never use. I think in 2025, we need to stop thinking about customer ownership and start thinking about what value we are providing. Because I have a Google account that I pay for. I have an M-Pesa account that I use. I have a bank account that I use. I pay rent somewhere. So who owns me? I mean, you guys want to cut me apart into how many pieces? I think the point is we're getting into this situation where ownership of my data and my consent to you as a brand to use my data to serve me in the way that I want to be served is going to be the most crucial thing going forward to create economic value. Thank you.
Yeah, it's a mindset shift. I think there was one more comment over there. I just want to, yeah, maybe you and then I'll say one thing.
I think open finance in Kenya will be a success if it is driven by the regulator, because in a market where information is siloed, an integration of this siloed information is going to be very effective in driving open finance. But when there are regulations barring that, it makes it very difficult to have a useful application of this information. So if a policy framework is there to allow the integration of data that is siloed independently, then this is going to drive open finance successfully.
And I'm glad you mentioned that side around some of the compliance challenges, because that came up over and over, that sometimes we're not clear, am I complying with the Data Protection Act or not? And with open finance, I think having the ODPC involved to set the standards will give more surety to the industry. I would add one thing. I know we got to do the panel now, so just one thing from my side in terms of success metrics I'd love for us to think about once we're ready to go live is, you know, things like reduction in cost of lending, you know, increased number of partnerships. I think also some of those industry metrics where we'll be able to really see, you know, number of SMEs getting access to credit, things like that. Well, I'll turn it over to our wonderful MC. Thank you all so much for being such great participants in this first kickoff session. And now we have an amazing panel, and I really am excited to hear what they have to say. Thank you.
So thank you so much for that. Okay, thank you so much. So now we dive into our first panel discussion, looking at the role of financial institutions, fintechs, industry players in the open finance space. And moderating this session is Fidelis Muya, Director of Technical Services at the Kenya Bankers Association. Over to you, Fidelis.
Yeah, I'll sit at the far end and then thank you very much, Moses. Good morning, everyone. Just to set the context for the panel, we had a very insightful presentation by Ref, and this is an infusion of two things. The first one is the study that we did with most of you who participated in the study on open finance, and then he added international insights to give a broader context. And for my panel, I want us to react mostly to his study and put your local context to it so that we now can have a conversation about where we want to go. So I have a few industry leaders to invite to my panel. I do know we have some online participants. So if you have any questions during the panel discussions, I think you can put them on and then we'll pick them at the end of the session or halfway through. We can actually engage so that we have a conversation. It's not really the panel talking to you. It will be sharing views between us and the panelists. So my first panelist is a good friend of ours. She's from NCBA, and she's called Kantai. Please come to the table. We also are privileged to have Mr. Joshua from Pezesha. Please. Vikaram, please, if you could join us. Is Victor here yet?
Victor is not yet here. Okay. He's running a bit late, but he'll join us shortly.
We'll proceed. We hope he'll join us during the session. I will just start the panel by to introduce yourselves, starting with the one at the end. Just say what you do, and as well, give us a context of what your business and the open finance, how you see it progressing. Basically, what you currently do that we can say is open finance, and then after that, you can then give your comments.
Okay. Good morning, everyone. My name is Karen Kantai. I'm the Chief Risk Officer of Loop DFS Limited, which is a fintech subsidiary of NCBA. I think our story is very interesting because we started off in 2012. Our open finance journey began in 2012, if you may, because in partnership with M-Pesa, we actually leveraged on M-Pesa data to provide digital credit. Hence, our flagship products, M-Shwari and Fuliza, are currently disbursing USD 6 billion per annum. So that was our advent of open finance, because then that integration enabled us. We then evolved into a platform, fully fledged platform in 2023, where we're actually providing a lifestyle app or a platform which is connecting consumers and producers, merchants and consumers as well. What does that do? It actually helps us collect data from the ecosystem to be able to make decisions for credit and also create or develop hyper-personalized products for the customer. I think somebody asked, I think it's Ali, who owns the customer, who owns data? It's actually the customer, in my opinion, who owns data. So instead of, we collect that data and we enable through algorithms to make decisions to help the customer with his pain points, address his pain points, and add value. So adding value for us is very key. And so that's where we are. It's fragmented right now. Where do I think open finance is going? Right now it's fragmented. The principles are there, but now we just need a universal type of infrastructure. Yes, thank you.
Okay, thank you very much. Pleasure to be here, everyone. My name's Josh. I'm the Chief Data Officer at Possessia. For those who don't know Possessia, Possessia is a SME enabler financing platform. So typically we do what we call embedded finance, whereby we operate through value chain partnerships to provide inventory financing and buy now, pay later solutions. Similar to NCBA Loop, we also have a flagship product with Safaricom called M-Kopa Wapochi, whereby we're providing financing for micro SMEs within Safaricom's ecosystem. Possessia isn't just a credit provider, it's also an infrastructure business. So we have a proprietary credit scoring technology platform called Patascore, whereby other financial participants, banks, credit providers, payment service providers can tap into our infrastructure to access alternative credit scoring, fraud detection, and customer verification services as well. So we're really looking at Patascore, the solution partner, to basically facilitate a more integrated system. Thank you.
Thank you so much, everyone. I'm really excited to be here and having these discussions. I think I want to thank Mr. Ali first. I know we're on a prime time in June last year where we had this discussion about open finance, open banking, and I'm so happy that a few months later we're actually having these discussions and making this a reality in Kenya. So my name is Vikran. So I work for a company called Paystack. I hold a bunch of hats at Paystack, but my main focus is Chief Product and Technology Officer for Kenya. And basically what Paystack is, we're a digital payments company, Africa focused. Our mission is very simple, power the ambition of Africans. So started in Nigeria, we're about 9 years old, helping multiple markets with different payment solutions. We are a subsidiary of Stripe in the US, one of the largest privately owned fintechs. And one of the things we want to do is just because we help a lot of B2Bs, is how do we support businesses, consumers, get the best future. So thank you so much for having me here.
Thank you very much. And I think Ali seems to have set the tone in that we seem to have a concern about who owns the customer. I believe there is nobody who believes they own the customer here. Ali set the tone very well to say he is owned by very many people, because if everybody was to take a chunk of what they own of Ali, there will be very little of him left. However, what we are looking at is integrations, and I know you've all mentioned of integration with one partner or several partners or multiple partners. The big concept about open finance is data sharing and the agreements that you do. So for example, you have integrated with Safaricom and you have developed some integrations with them. To what level do you consider control of those APIs and the control of the integration, shall we say, make or break for you to actually do an open finance framework, because that's really where the key is? Sorry, there's another mic. Just.
That's a very good question, because you see, I think the challenge you had, even with the similar process in CIS framework, you'll find that the challenge has been the big players also, challenge the whole ecosystem to say, why would other people leverage on my data for free? So I think one of the issues that we've been dealing with is really IP standards. How do we protect IP for the people who have already built this infrastructure and invested in this infrastructure? How do we have a level playing field? And who also governs the API framework? So I'll give an example of EU, PSD 12. They've actually revisited that because of the fragmented and not standardized API frameworks and channels and protocols. And that has brought about fraud. What we are facing even now with Safaricom is KYC fraud. That's a big thing that we are dealing with right now. Of course, we put controls under it. So we need to then understand how do we regulate the open finance framework, especially the API framework. Do we have the history? Do we have the right infrastructure? Is everyone on the same level? Because Safaricom has built it, NCBA has built it, many more have built it, but they're small fintechs. Do they have that infrastructure? What's the compliance cost behind it? Should we regulate it? Yeah, so that's what I think.
Okay.
Yeah, thanks for that. I think just building on those comments, I think, our experience with Safaricom has been a very interesting one. I think Safaricom is a unique entity in this conversation because I just think the way they are governed and the way they operate is slightly different from the rest of the system. But they absolutely need a seat at the table when it comes to open finance, and they're going to be an integral part of whether this can be successful or not. Could you ask him to speak up a bit? Sorry, yes, thank you. So I think maybe to Ali's point, I think the biggest challenge we've had with Safaricom in particular within that ecosystem and that product is that data sharing piece. There is a sense of protectionism around that data, and I think that protectionism comes from two things. I think one, the perceived value in the customer data itself. Everyone wants to hold on to their data because they want all of that value to come through their ecosystem, and they feel like giving up that data means that value may diminish or then go to some of the competitors. So I think there's that element. I think two, there's a big degree of uncertainty around what data can be shared, how it can be shared, and some of the risks around sharing that data and the misconduct. So I think, the Data Protection Act has provided a really solid foundation for open finance, but I think it also needs to evolve to keep up with the evolving demands as well, and hopefully reduce that level of uncertainty that is leading to that protectionism around data.
Okay. I hope you are not integrated to Safaricom because I want somebody to discuss someone else beyond Safaricom. I don't want Safaricom to be the subject of our panel. Sorry.
Can you hear me?
Yeah.
Yeah, to be fair, we're deeply integrated with Safaricom, and I just want to say one thing, working with Safaricom has been a really good experience for us. Again, there's some data structures that at least a PSP as ourselves would need, but I think we've worked around some of these things with them. So I think one of the biggest challenges we had is when the data protection, when they started masking data, was for example, if we needed to refund the customer, we don't have enough data on the customer to be able to do that, right? But we've worked with them. We've been able to get some feedback on this, how we can do it. And I think one of the things Safaricom has done. Sorry, I just want to touch on Safaricom a bit. Yeah, I think one of the things I'm really liking about their approach now is they're adopting this product-centric approach, right? Where they're going to market, trying to learn. I know we're doing a lot of cool stuff with them. They're trying to understand how do we build products that are actually what the customer needs. I think to quote what Ali says, V2 Core Ground, they're now trying to understand what is it that people need, and they're building tools and in a more safe environment. I think the other parties we work with are banks. But forgive me to say this, but over the last 10 years I've been in this market, I've had, and I've got a lot of criticism for this, is that I have a love-hate relationship with banks, right? So why I say love-hate, right? So like most of the years has been a hate relationship, because one of the things that we've really struggled as a PSP is like, you're sitting in the forefront of like a lot of things like the market needs, like you want to build products, but you're not able to do it because the banks, one, have not either, the technology has not caught up, or the regulation has not caught up, or then just things like risk, is just like a lot of banks are risk averse, right? So like, how do we support the banking infrastructure? And I think we're getting there right now. Like a lot of banks, I think previously was building products, maybe, sorry to say, like ticking a KPI, or someone's ticking a checkbox to say, oh, we've built this open banking infrastructure. But when you get into the roots of what they've built, it's like, there's nothing you can use on that product, right? And for me, that was like the biggest frustration I had over the years, because there's so much cool stuff that we want to build, but we can't do it because the technology doesn't exist. But I think now we're seeing like banks, for example, they're becoming more product-centric. They're willing to listen. They're building products that at least like PSPs, B2B customers need, B2C customers, or C2B customers need as well, right? The other interesting one is like for us, I think in terms of data regulation, I think, or just like data sharing has become with the central bank, right? I don't know if how many of you know this, like a lot of like PSPs or regulated industries have to submit data to the regulator on a monthly basis, quarterly basis, right? And that sometimes becomes a very hard thing, because you have to manually input data and share it with the regulator, right? But I'm really happy to see like the central bank having the ability to create open APIs for the industry to be able to send data, right? So I think those are some of the interesting things we're seeing, so that at least for the central bank, because now they're getting real-time data, it means they're able to make better decisions like that will inform some of these policies and some of these discussions we're having. Yeah, I think that's pretty much it.
Okay, we mentioned regulators, and I know most of you, actually all of you, are regulated. What do you see the role of a regulator, especially in terms of enforcing the frameworks, enforcing the regulations, and the balance between your business and the regulatory compliance element? You mentioned cost of compliance. Maybe you can address that bit to see how that would affect open finance?
So I think from the regulator's perspective, if they can provide an enabling environment where we actually co-create solutions for this particular framework. Because as industry players, then we are the experts, and then we know how we want this to act. But we also have to take the regulations, motivations into play. So for them is to actually ask themselves, through a sandbox probably arrangement, can we co-create and test through rules of engagement to be able to see the innovation balanced with the regulatory motivations, which is really addressing systemic risk and consumer protection. They also come in place in terms of maybe helping the industry with the compliance costs. Like I said, not everybody has the infrastructure like the big players. We then support those smaller players in terms of compliance costs. Do we subsidize? Do we have an API charge for the bigger players to incentivize them?